Hi traders, Mandy here from High Performance Trading. Now we just hosted the Australian Golf Open here in Melbourne, and we had some of the best golfers playing here. And it was amazing to watch them really perform at the highest level, dealing with challenges and with the weather and dealing with setbacks and overcoming them. It was just so interesting to see. And I believe traders can learn plenty from elite golfers. Because, one of the biggest nemesis for both athletes and traders is getting thrown off our game after a mistake and losing confidence after an unforced error, right? I mean, who hasn't been there when we start doubting ourselves? And what we see again and again in elite sport is this. It's not necessarily the golfer or the tennis player who hits the ball the hardest or the furthest who wins. It's the athlete with the most resilient, stoic mindset. And that is what market wizard Linda Rushke always says. If you are not sure who she is, just Google her, look at her YouTube channel. Lots of amazing interviews with her as well. She's a seasoned trader, was one of the best in the world. So she always says that she is not necessarily the best technical trader, but she has this uncanny ability to make a comeback like a world champion after making a mistake. And that's why I always call her Wings. We had this racehorse called Wings here in Australia. And what was so remarkable about her, she was unbeaten in 33 races after she found her groove, right? And her groove was coming from the back of the field and then winning with like 3, 4, 5 lengths. And this is really a superpower. We call it recovery rate in trading. Now, so many newbie traders chase perfection, but that is not what it's about. Good trading is about quick mental recovery. Take Tiger Woods, for example. I have a friend who is a professional golfer, and he once said to me that Tiger wasn't always the most technically gifted player on the course, but his real superpower was his mental capital. He had this extraordinary ability to leave mistakes in the past and fully focus on playing his best shot in the present moment. If he made a mistake on, let's say, putt number 9, he would, by the time he gets to tee off at number 10, he had already dealt with it emotionally, mentally, and just really focused on the next shot. In trading, most traders, metaphorically speaking, they mess up on, I don't know, on putt number 10, and they still carry the result when they tee off on number 11, being angry with themselves, doubting themselves, and the past mistakes, they start influencing their present decisions. In the wonderful world of behavioral finance, we call that a recency bias. So let's unpack that. What exactly is recency bias? Well, recency bias is a cognitive trap that I see so many traders fall into. It's one of the biggest killers of good trading performance around, I can tell you that. So by definition, it's the tendency to give more weight to recent events rather than the long-term picture or the full data set. Now, what that means in real terms is that the focus of your decisions changes from process to outcome, especially after a recent painful trading experience. So you don't look at what's the price action telling you, the outcome of, I hope that profits are being taken away from me, or I need to make that loss back. So being focused on money, that's then unconsciously most of the time driving the trading decisions. So instead of trading what's actually in front of us, we start trading trying to avoid the pain of repeating of what just happened in the past. It's always about avoidance from pain, of pain, which is also a beautiful behavioral bias, which is called regret aversion, which I'm going to make another video about. Now, let me share with you exactly how recency bias shows up in real trading. I'm going to show you an example from a trader that I was working with recently. Let me share my screen. Okay. And it's, oh, okay. So it should be this one, I guess. Excellent. Found it. So if you look at this trade, he was trading FOMC. He loves trading FOMC and he's really, really good at it as well. You see, he nailed the entry. He got in when the high of this candle was taken out and he saw at 6860 and he made 55 points on this. But then the US market closed and Asia started selling off. Now he wasn't in front of his screen because he had to take his kids to I don't know, some sports event. And Asia was selling off, selling off, selling off. And he had put a stop loss. He was like, that's a safe stop loss. It's enough, for a little retrace, then it will continue to the upside. But guess what happened? His stop loss was taken out. So he left 55 points on the table and on top of that had a 10-point stop loss on the ES. And so when he came home, he was just so bitter when he saw that. So what then happened was Europe took out this previous low here. It was a test and reject or a failed break, or there's so many names for this kind of setup, turtle soup, whatever you want to call it, right? Manipulation is just the Wyckoff, of course, in the spring. Now Europe started buying up, but then he was asleep. He was in bed. And then US opened. So this is this big red candle. So was woke up here where my little sunshine is. US opened, first 30 minutes was coming down and then again was being bought up. And he had to nail the entry again, right? Funny enough, at 6,850. And I see that also a lot when I go through the stats with my traders where they unconsciously enter at a price where they previously got taken out. And, I pointed that out to him and he was like, oh my God, I didn't notice. So you can see the epic entry again. Now here we had a little retracement and then it continued to the upside, but he got spooked. So he took his 10-point profit. That was again unconsciously that he got out at 6,860, the 10 points. He thought he got out because it took out the half of this candle here. But no, his exit. So his exit rules is his stop loss rules is that he puts a stop loss at the low of the first candle and then moves it up as the high of the candle is being taken out. So he would have put a stop loss next underneath here and then here and then here. So that's how he trails his stop loss. But no, what did he do? He got spooked. He thought, oh, you're going to sell off again. I don't want to give my profits back again. And so you can see the market, the price went up, hiking Mount Everest and left him behind in the dust. And he was really, really angry. As you can see, he left 70 points on the table. Now, again, I see that all the time that traders, they don't exit because the market or their strategy tells them to exit. It's because recency bias hit. He had messed up his first trade, so the FOMC trade, and instead of following his strategy, he now traded his fear of that happening again. He traded his regret from the first trade. He traded trying to soothe the pain of the first trade. Yeah, so that is where mental toughness comes in. And anyone who says, you just need to practice your strategy. Well, if it were that easy, really, everyone would be a successful trader. Or, anyone would be slim and fit because when we when we eat too much, even if you have to lose weight or have diabetes, it's always emotionally driven. Logically, we know what to do, but yeah, following through and executing in real time, that's always a challenge, isn't it? Or as Steve Ward said so beautifully, everyone knows what to do. It's doing what you know. That's the tough part. So you can see it was very, very bitter. And you can see that he was trading his emotions, not his strategy. And that's exactly where the recency bias trap is. Now, why is it that bad trades stick out in our minds? And think about it. Traders get affected by previous bad decisions. And by the way, not just traders, like every athlete, relationships as well, right? People have bad experiences in relationships and they say, I will never ever go out with a person like this guy or girl. And but that's really not what happens. It's just a coincidence that someone had a specific trait. It's always about us. How did we handle a situation? Because closing trades early, like in this case, is often a coping mechanism. And also that you put a stop loss so low, like a safe a safe stop loss. That was also a coping mechanism because he tried to avoid the future regret. Now, these previous mistakes that can trigger self-doubt and anxiety, and the impulse to close the trade is really an attempt to escape that discomfort. That's all. And as you could see in our example, it's not about the price action. It's about being able to tolerate the anxiety and uncertainty. And that's exactly what Linda Rushke's superpower is. She has this massive capacity to handle pain and to handle uncertainty and to focus on what really matters, her strategy, her experience, what the market says, what price says. And she's not afraid of making a mistake. Like if she has a loss or if she gets out too early or too late, so be it, right? So no perfectionism in that department. Now, when we look at it in terms of our biology and how we humans are being built, it is actually completely normal that we behave and think like that because our brains are wired for survival in every moment. The brain scans past experiences and asks, is there a threat here? And in trading, that wiring works against us, even though in general life it might help us to survive. But the brain treats financial uncertainty like physical danger, and that's where the problems start. And the question, of course, is now how do traders become more stoic, more mentally tough, like Linda Rushke, like Tiger Woods, like Roger Federer? How can we learn stoicism from those elite athletes? And if you look at early footage, for example, of Federer's career, really interesting, he was incredibly emotional. He'd get frustrated and angry, visibly rattled after mistakes. But when you watch him at the peak of his career, the emotional activity is gone. He stays calm, focused, process driven. Same player, same skill, but different mindset. And what was really interesting was performance psychologist Dr. Jim Loehr. Like I love his work because he studied very early on in the I think in the 80s, I can't remember, but I think it was in the 80s where he studied the best tennis players in the world and how did they cope with the pain of unforced errors and still continued performing at the highest levels because that's really what it takes, right? Who crumbles first after making a mistake? And he discovered the so-called 16-second rule because between sets, traders, athletes, tennis players have 16 seconds to reset, to recover. Now, lucky we traders, we have more than 16 seconds. Now, between points, these players would use that time intentionally. They physically would turn away from the court, mentally walking away from their mistakes. They would reset emotionally by resetting their tennis racket, right? The strings of the racket. They refocus before the next point by maybe rubbing their hand, the sweat off on their legs, or just something like they have a routine that helps them to reset mentally. So, for example, I love Ash Barty. So Ash Barty, our Australian top number one player, who is now unfortunately retired. How did she manage to stay so focused and composed no matter what? Because I love her because she actually worked with a mindset coach, a phenomenal guy, also here in Australia. And she had like a real routine that she could share. Like most athletes, they're unconscious on how they perform so well, but she actually had a strategy that she had created with her mindset coach. And the first thing that she was focusing on is an unforced error is a growth opportunity. So when she would make a mistake, like what most traders do, they get angry at themselves, they abuse themselves, they say, you're such an idiot. I will never make it. How could I do that again? She's like, okay, here, growth opportunity. I know I'm going to talk that through with my coach afterwards and be better for it. And she had a reset mantra: calm, clear, sharp, present, fun. These are her values. This is really important to her. And that helped her to steer away and override anxiety because in that moment, you can't really have too much room for anxiety. You need to make space for your mantra, your calm, clear, sharp, present, focused, fun. And then, of course, control the controllables. And that's something that I've already learned from Steve Ward in 2012, who also worked with athletes at the time. Control the controllables is, yeah, I can't control how my opponent plays or what the market does, but how do I manage myself? Everyone can learn that, right? So the 16-second rule or the reset rule, use that and apply that into your trading and look at what is it for you that you can do. What is also really interesting is Jelena Jokic. I watched a documentary recently on Netflix, and she had an enormous amount of abuse, physical abuse, and emotional and mental abuse from her father. And she still became one of the best tennis players in the world. Like, how did she do that? They actually asked her that question. And she said, I compartmentalized everything. When I was on court and I got freaked out because I knew if I don't perform well, my father is going to hit me. And, sometimes she was unconscious. That's how hard he hit her. And she is like, I just focused on the next piece, like on the next serve, on the next point, on the next part of the swing. And that's how she made it. Like, remarkable. Her trading is not different. Focus on the next bar if you get freaked out. Focus on your moving average. Focus on what you can process and um, what you can handle. And if the emotion, the intensity, the impulse gets too much, what that means is that you don't have enough capacity for pain and uncertainty. And that's what you can practice. You can really build that up. Because if you don't have the capacity, then you will fall back into coping mechanisms, which is pressing the button and getting out too early, or the opposite, thinking I have to give it like a really, really wide stop to be safe, that the money is not being taken away from us. And as we know, Trader Murphy's Law, the very thing that we fear is exactly going to happen. So trading is no different. Trade like a top golfer and not like a gambler. And remember, every successful trader has a dark past, and that's why every losing trader can have a bright future. And if you would like to continue learning about what is maybe for you that you can improve, how you can overcome your challenges, well, there's two ways we can work together. There is the one-on-one coaching, where we can do deep dives into your trading challenges and resolve them on your own, or we can do group coaching. I just reinstated our Pro Trader HQ again, which is a group mentorship, and my traders always say they love the group mentoring so much because we can learn so much from each other. And it's nice to be in a small group where it's safe and you see that you're not alone in your stupid mistakes. And you also can learn by observing how others are handling and learning from their challenges and improve and get better, and then apply that for yourself as well. Well, the link is below. And yeah, I hope you have an amazing Christmas, and I'm also going to do another video after Christmas or festive season, whatever you guys celebrate. And I hope this video has been amazing for you guys. Ciao for now.